2, 1, yours.
Okay, great. Thank you so much. Before I begin, I just want to thank David, Jessica, and everyone at the Chamber for inviting me to join you all today. It's wonderful to be here and to share some of our educational resources with you. My name is Victoria. I am a member of the Outreach and Compliance Unit, which is a part of the Unclaimed Property Division of the State Controller's Office. And today I'll be providing a pretty broad overview of California's unclaimed property reporting process. I'll go through all 5 steps of the process, starting from reviewing your books and records to if you do find unclaimed property on your books and records, what to do with it, how to report it to the state. And then, if it's not able to be reunited with the owner, how then to remit it or transfer it to the state as well. Before we begin, just making sure everyone is able to hear me and view the presentation on your screen. If not, let me know. But otherwise, I will go ahead and begin. And I am going to turn my camera off for this part of it because it is distracting to myself, but also so our slides can take center stage here. So today I'm going to provide an introduction and overview of California's unclaimed property reporting process. And here's what we're going to go over today. First, we're going to talk about what unclaimed property is and how it can be claimed. We'll go over the ins and outs of California's unclaimed property reporting process. We'll offer tips on how businesses can maintain your own records to make it easier to report unclaimed property and to proactively prevent property from becoming unclaimed. And finally, we'll show you where to find available resources on the State Controller's Office website that can help you in the reporting process. One other thing I do need to put out there, as a reminder, all materials and information contained within this presentation are for informational purposes only and do not constitute legal advice. This presentation is not intended to be the sole source of information regarding the holder or business's legal obligations under the unclaimed property law. Each organization should review that law to ensure that it meets all reporting requirements. It's my little disclaimer there. So to give you a little background on the Unclaimed Property Division, our mission is to safeguard lost and abandoned property and return it to its rightful owners. The Outreach and Compliance Unit, which again is the unit that I'm a part of, we provide information and resources to holders. Holders is a term you're going to hear me use a lot today. That's a term that we use to mean businesses or organizations in possession of unclaimed property that belongs to someone else. So a business that is holding unclaimed property for someone else is a holder. And at Outreach and Compliance, we work directly with holders to help prepare them for the reporting process. The controller's unclaimed property website is claimit.ca.gov. And this website lets owners claim their property that has been reported from businesses like yours throughout the country. If you've never been to our Claimit website, I highly recommend checking it out. And even if you have in the past, if it's been more than a year, definitely come check it out again because businesses are reporting to us every year. So even if you go to this website and search for your own name and nothing comes up, maybe next year something might come up. You never know. So we always recommend going and checking this out. To do that, you'll go to claimit.ca.gov. And then once you're on that homepage, you'll click on the first link, which is search for unclaimed property. Once you're on the search page, you can type in your details to search for any property that is being held for you by the State Controller's Office. You can search under your own name. You can search under your business's name as well. You can also search under a family member's name. I recently looked up my brother's name and found out that he had some unclaimed funds that were from a few years ago that he didn't even know existed. So that was exciting for him. You might be surprised at what comes up. A lot of people don't know about unclaimed property or even that they can search for it. So this is something I really enjoy sharing. A few weeks ago, I was giving this presentation to a different chamber of commerce, and one of the attendees searched for her name just, while I was going over this website, and she realized that the state of California was holding $150 for her from 30 years ago. The state controller's office has safeguarded it for her for all of that time. She did not know that money existed, but she searched her name and found that we were holding it, and she was able to start that claims process right through the website. The reason that she found that property and the reason that you might also find property under your name or your business's name is because a business that you've been involved with in the past reported their unclaimed property to the state. So that business went through the same reporting process that I'm going to introduce to you today. So we're going to go over how you do this, how a business does go about finding this unclaimed property, how to even recognize it on your books and records, and then what to do if it does come up that you have it on your books and records. So let's begin by understanding what unclaimed property is. Unclaimed property is any financial asset that has remained inactive by the owner for a period of time specified in the law. This slide displays a variety of types of assets that can become unclaimed property. So things like payroll-related property, customer refunds, overpayments, even the contents of safe deposit boxes, all of that can be considered unclaimed and therefore reportable if they are dormant or inactive for that period of time that is specified in the law. The most common types of unclaimed property that the controller's office receives are refunds, dividends, and miscellaneous checks. The checks can include things like uncashed vendor payments, uncashed paychecks, and so forth. If you're looking at this list and you're not quite sure if something qualifies as unclaimed property that's on your company's books, you can always call or email Outreach and Compliance Unit, and hopefully we can provide some clarification on that for you. So why should you care about reporting unclaimed property? Well, reporting and remitting unclaimed property to the state is a public service. It provides a way for past customers or their heirs to find their lost and abandoned property. It's also helpful to remember that these funds can be lifelines for people who are facing hardship, especially in the current economic climate. Unclaimed property does little to benefit the business holding it, other than creating a liability, but remitting the property can reunite the funds with an owner who might be in need. Returning funds to past customers also puts money in the hands of the public for spending in support of local economies throughout the state. So here are some key terms that will help you understand the reporting instructions. So again, a holder is any business or entity holding property that belongs to another person or entity. An owner is the person or entity who appears to be entitled to the property being held by the holder. The word escheat refers to the legal transfer of financial assets to the state. The as of date in reporting is the date as of which property is determined to be unclaimed. In the state of California, your as of date on your unclaimed property reports can be either your business's fiscal year end date, so the date that your company closes its books and records for the year, or you can use the state of California's fiscal year-end date, which is June 30th. Dormancy refers to a period of time that the owner does not initiate action or express interest in their property. Different property types have different dormancy periods in California. We'll go over that a little bit more in the next few slides, but that dormancy period for a property refers to the length of time that there is no action or interest taken or expressed on that property. Remit is the act of transferring property or payment to the state, and then remittance is the property or payment transferred to the state. So now let's dive into a basic overview of identifying unclaimed property on your books. So reviewing your books and records involves identifying any properties that are in danger of becoming unclaimed, which means determining the property type and how long it's been dormant or inactive. So you want to figure out what the property is that you have on your books and records and what its mandated dormancy period is in California. Then the holder will need to figure out the date of last activity or contact with the owner of these properties. And then the holder will compare those dates with the as of date used by their business. And that will determine when they should perform due diligence, which is another part of the reporting process that I will go over, and then when they will need to submit their unclaimed property reports. So let's break down how you figure out all of that different information. So different property types have different dormancy periods. And again, a dormancy period is a period of inactivity, the length of which is specified in California's unclaimed property law. So these different property types have different dormancy periods that have to be met before the property can be considered unclaimed and therefore reportable. In California, payroll-related property like wages and salaries, that has a 1-year dormancy. Most other property types in California have a 3-year dormancy. And then we have money orders and traveler's checks, which have 7-year and 15-year dormancy periods, respectively. In the bottom right-hand corner of this slide is a link to our dormancy table chart that you can save as a guide. It has a list of most of the frequently reported property types, as well as their associated dormancy periods in California. The next step is determining the last activity or contact date. So businesses need to review their records for the last time the property owner initiated activity on the property or expressed interest in it. So examples of owner-initiated activity can include deposits or withdrawals on accounts or activity on a related account. Examples of contact can include successful communication with the property owner in regards to the property, or the owner otherwise showing or expressing interest in the property. Businesses should make a point to keep the dates of these interactions in their records, as they are key to determining when a property will become unclaimed. The as of date determines when the property has met the dormancy period to become unclaimed. So property is reportable as of this date. And again, your as of date in reporting in California can be either your company's fiscal year-end date, or you can use the state of California's fiscal year-end date, which is June 30th. Whichever one you use, you do want to stay consistent and use that same as of date on all reporting forms year after year, because it can throw off your reporting schedule, and it could mean that you end up reporting something too early or too late and face fines potentially for that. So you want to be consistent with your reporting as of date. To verify that a property is indeed reportable, you want to compare the as of date to the date of last contact or activity. If the property has met or exceeded the dormancy period as of your company's as of date, it is reportable. If the property has not met the dormancy period by the as of date, it is not yet reportable. We have report cycle tables on the State Controller's Office website that can help identify when property is reportable. We have a link to it here. I'll also send you a link to those reporting cycle tables in my follow-up email. So let's start with a look at the timeline of a typical reporting cycle. So in California, there are 2 reports holders are required to submit: the notice report and the remit report. The notice report is due before November 1st for most businesses. For life insurance companies, it's due before May 1st. Life insurance companies are on a slightly different reporting schedule, and I'll be sure to call out those dates for you as well, in case anyone here is from life insurance. But for most businesses, you're submitting this notice report to us before November 1st. And I like to call the notice report the Heads Up California report, because it's telling the state, hey, I have this unclaimed property that I will be turning over to you unless the property owner comes forward and claims it. There's no property remittance at this time. All you're doing is just sharing information with the State Controller's Office about the property type and the property owner. The remit report is the second and final report. And the purpose of the remit report is for businesses to list all properties that still remain unclaimed that will be remitted to the state. And then most businesses will remit the property itself at this point as well. Remit reports must be submitted 7 to 7.5 months after the notice report is due, which for most companies would be between June 1st and June 15th. If you're a life insurance company, your remit report is typically due between December 1st and December 15th. So those are the 2 reports that make up California's 2-report process. However, holders must perform 3 additional tasks to effectively complete the reporting process, and I'm going to introduce those now. Step 1 is reviewing books and records. As we just discussed, to identify any property that is in danger of becoming unclaimed and subject to reporting. Once records review is complete, businesses must send notices to the owners of securities and safekeeping properties of any value and other property types that are valued at $50 or more. These notices inform the owners that their property is in danger of escheating to the state, and they need to be mailed out 6 to 12 months before the property is due to be reported. This gives the owner a chance to reactivate their accounts or retrieve their property before it is escheated to the state. And this process of sending notices to owners is called due diligence. After completing due diligence, businesses will then submit the notice report, documenting the properties that remain unclaimed. After the controller receives the notice report, we then will send letters of our own, referred to as pre-escheat notices, to property owners that are listed in the notice reports. And in these pre-escheat notices, we instruct the property owners to reach out to the holders to retrieve their property before it is remitted to the state. After submitting the notice report, but before submitting the remit report, you might get inquiries from owners about their property. It's important that you respond to all inquiries from owners, record their interest in the properties, and then make appropriate efforts to reunite them with their property. And then step 5, the final step, is submitting the remit report and remittance. So all property that still remains unclaimed must be included in the remit report, which for most companies is sent in between June 1st and June 15th. The transfer of the property itself or the remittance must also be completed at this time as well. So the notice report, the first of the 2 reports that you'll send in if you do have unclaimed property on your books and records, the notice report contains 2 items: the universal holder face sheet and the property owner details list. So the UFS-1 form, which is the universal holder face sheet, contains information about the business that's reporting, so the holder. In the UFS-1, you're providing us with points of contact for the controller's office employees and points of contact that the property owners can use to get a hold of someone at your company about their property. The UFS-1 also includes a summary of the total property being reported. So cash, shares, safe deposit box contents, whatever unclaimed property you're reporting to us. The property owner details list identifies all of the properties contained in the report, and it includes all of the data that businesses have on the property owners and their properties. The more information businesses provide in this property owner details list, the more likely the property can eventually be returned to its owner. We have a detailed notice report checklist linked here in this slide. And then we also have a link to free reporting software that's available on unclaimed.org. That is the website for the National Association of Unclaimed Property Administrators. We call them NAPA for short. They offer free reporting software on their website for businesses that are reporting, I believe it's fewer than 100 properties. You should be able to access and use the free reporting software on their website. You do need to use reporting software of some kind to create the property owner details list. We go over this part of the reporting process in more detail in our public webinars. Today, I just want to kind of introduce the idea to you, but if anyone has any follow-up questions or would like more information on filling out the UFS-1 form or creating this property owner details list and why it requires reporting software, you can definitely reach out to me after the presentation or just respond to the follow-up email I'm going to send you. So once you've finished preparing the UFS-1 form and the property owner details using that reporting software, you can save the files for your own records, and then now you can submit your notice report using our online holder reporting portal. And again, most businesses, unless you're a life insurance company, most businesses are submitting this report to us before November 1st. And the notice report, again, is just information sharing with us. You're not including remittance or transfer of the property with this report. Just to introduce our new online reporting portal to you a little more, we launched it about a month ago. This is, I believe, the first time that holders have the opportunity to submit their notice report to us directly through the website. So that's pretty exciting. This is a link that takes you directly to the portal webpage, and that's where you can register and then follow the prompts to upload your notice report. So the second half of our two report process is the Remit report. So when you submit the Remit report, you're turning 4 things into us. A new updated version of the universal holder face sheet. This is going to have updated amounts and updated details after you hopefully have maybe reunited some of the property you gave us a heads up about in the notice report. It'll include an updated property owner details list. And again, that is created using reporting software. Also, the actual remittance. So if you do have property unclaimed funds that you have not been able to reunite with the property owner, then you will be sending that to us as well at this point, along with a signed Remit reminder letter, which is a letter that you receive after your notice report has been processed. And again, we offer the option to submit your Remit report through our new reporting portal as well. So I don't think I mentioned this beginning, but California is the only state with a 2-report process for unclaimed property, which can seem a little daunting at first. The process is fairly detailed from start to finish. If you are a first-time reporter, we do recommend registering for one of our introduction webinars. In our introduction webinars, we cover every step of the reporting process. And this can be one of the best ways to learn the process from start to finish. We also offer free one-on-one webinars specifically for your business, and those are scheduled at your convenience. It's free, like I said, just like our public webinars. This is just our way of wanting to make sure that your staff gets all the assistance it needs to complete and submit reports correctly. And now, before we go, I'd like to share just a few tips for record keeping and reducing unclaimed property to begin with. So the more a business makes tracking unclaimed property part of a routine, the less time they'll have to spend searching for and reporting it. So what does that routine look like? Keeping thorough records and notes. So one of the most important things you can do to keep track of unclaimed property is to keep quality records. We recommend keeping thorough and complete records of all transactions and using journal entries and memo fields to help identify transactions in the future. Because 6 months down the line, it can be very difficult to identify transactions without those kinds of notes. Track dormancy, dates of last contact, and owner activity. We recommend making note of communications with owners, specifying dates of contact with the owner and dates when owner-initiated activity takes place. If possible, you can create entry items for these dates in your accounting software, and then this can potentially make the search for unclaimed property as easy as filtering a few fields by date. Keep track of unclaimed property. So we recommend keeping an ongoing list of property that's in danger of becoming unclaimed. Keeping a separate list can help you keep track of who you need to contact and any attempts to contact the owners. And it can help you prepare an unclaimed property report once the property becomes reportable. If you already have a working list of as yet unclaimed property, you'll have already performed a lot of the legwork that's involved in reporting. So now let's talk about some ways businesses can reduce the amount of unclaimed property on their books to begin with. Perform reconciliation frequently. Performing reconciliation frequently and routinely can help businesses identify incomplete transactions. Depending on the size of your business, you might consider reconciling on a daily, weekly, or monthly basis. And be sure to keep thorough subsidiary records to ensure owner information is not lost. Research uncashed checks. Document the purpose of checks and their current status, and then make notes of that in your records. Because again, using notes routinely will make account reconciliation and unclaimed property reporting much easier. Use direct deposit whenever possible. Direct deposit can facilitate the smooth transfer of funds and can drastically reduce the amount of property that must be reported. Automating payroll transactions can also save everyone time and eliminate the inconvenience of lost checks that need to be reissued. Use ACH transactions for accounts payable. Again, eliminating the use of paper checks can reduce human error. And then finally, communicate. When a business identifies property that's in danger of becoming unclaimed, it's a great idea to reach out to the intended recipient to reunite the funds before they need to be reported. And this also gives businesses a chance to reinforce relationships and build trust. Putting together a plan ahead of time can ensure accurate and timely reporting. The quickest and easiest thing businesses can do is create a timeline or calendar for reporting unclaimed property. You can also establish written procedures or even an unclaimed property manual for the office. Identify the staff responsible for reviewing records, preparing reports, and for responding to owner inquiries, and ensure all are trained appropriately. Monitor changes to unclaimed property laws or reporting procedures. One great way to do that is to subscribe to our email lists. I'll include a link on how to subscribe to those a little later in the webinar. Make address change forms readily available for staff or clients, and be prompt in updating all of that contact information for customers, for vendors, and for your employees. And consider including escheatment information in your company newsletter. You could also include a link to our unclaimed property website, claimit.ca.gov. Spread the word about that. You know, we have billions in unclaimed property being held for people, and there's a lot of people who don't even know to search for their names. So, you know, share the information about that as well. And then that's a useful way to kind of start talking about unclaimed property in general. We have many resources for reporting unclaimed property to California. They are available on our Go Report website. That's goreport.sco.ca.gov. And that's also where you can check out some of the other webinars that we're offering right now. We have registration open for webinars that focus on filing the notice report. That's the one that is due before November 1st for most companies. We have one that focuses on filing the Remit report. And then we have special subject webinars as well, including a webinar for reporting and remitting tangible safekeeping properties, such as safe deposit box contents. So for anyone in banking or finance, even hotels, you might consider signing up for that webinar. We also have a webinar that, again, provides a more detailed step-by-step explanation of this reporting process, including how to send out those due diligence notices, how to, you know, fill out and submit your notice report and remit report, what to do if you are remitting property to the state controller's office. So definitely check that out if you are new to reporting, or if you could just use a refresher for reporting in California. I also recommend signing up for our email lists. We have a newsletter that goes out twice a year in the fall and in the spring, and it has great articles summarizing changes in the law, reporting tips, and all sorts of useful information. So this is where I'll pause and turn on my camera again and just give anyone a chance to ask any questions, or I'm happy to go over anything that might still be unclear. And in the meantime, I'll share our contact information with you. Let me just turn on my camera here. Okay. And then before, I even get into any potential questions or anything like that, I just want to thank all of you again for your time and your attention today. Whether you're joining the webinar today or you're watching this a little bit later at a time that's more convenient for you, I'm just happy for your time and attention, and I hope this is helpful for you. And I will be following up with an email that will include a link to a lot of different reporting resources for you to help you prepare, as well as a copy of today's presentation slides. So you'll have that for your future reference as well.
Yeah, thank you, Victoria. I mean, after going through all this information, I can see why it's so important to have access to this presentation as well as the supporting documents, because it is a lot of information to follow, but also the sequence of where to go, and basically like the flow chart of where to go and who to contact, which office, and different property falls under different categories. So it has a slight different process as you go through it as well. So I think that in itself is going to be very important for our members to be able to have is that as a resource right there. So what I will do at this time, I'll go ahead and stop recording.
Okay.
And we'll see here. So we'll stop recording.